Good morning, everybody. It is Thursday, March 30th. One day before the end of the quarter, one day before the end of the week. I'll share with you some end of the quarter stuff. And you are lucky that a week ago, when I threw out the JP Morgan collar trade, it is now back. It is at above $1.50 as of this morning. Not so sure that it's going to hold for those of you that don't have interactive brokers, because we are getting the GDP numbers at 8:30 in the morning, and it is pretty fucking frustrating, put it that way. On Tuesday we had 3 green closes going into Tuesday. We knew we were going to get a red close. Big money trade over there on the spreads. On calls and puts, not much that could be taken care of. But I have been highlighting about the SPX March candle being 39.63.64. So it is very significant, because it would determine a red or a green month. Having gone back and shared that prior doesn't bode well for 2 consecutive red months. So more so what we're looking at here with the stats of the data. Having had 3 in a row, then even 4 in a row, which is more rare. 3 in a row we had in March, minus 7% followed. 3 in a row we had in January, February too, where we posted the high of the year, 6% followed. Went much lower, but 6% was the first move down. 4 in a row over there in January, minus 3% followed. Prior to 2023, November was the last time that happened, coming off of the November lows. Boom, minus 3% the very next day. Going back and back, and every time you had three in a row, or 4 in a row, 3 in a row, 4 in a row, you got a very nice, strong, very payful dip. Yesterday, throughout there, because of that absolutely no catalyst whatsoever, over 30-point rally overnight, which just continued to climb upward, that SPX 4045 is plausible. I highlighted very clearly it is very unlikely, again, using the fact that we had a 35-point rally and we were already overbought when we were getting into the morning. And as slow as everything went, all that we did was continue to build stronger and stronger sell divergences on smaller and medium-term time frames, but nothing took place. You had that final hour of the day, and boom, just went ahead there and skyrocketed. And again, just to highlight here, Monday, 33 points. Tuesday, the lowest of the year, 27 points. And yesterday, had we not had that final hour of the day, we would have traded lower than the half session. Sorry, the only session that would have been lower would have been that half trading session the day after Thanksgiving. We managed to get that push up there to 40-30. We accomplished a greater than 30-point range. Not a spectacular place to be on either side of the trade, whether you're playing calls and puts or you're playing over there on the spreads, specifically with the spreads, because we are now dealing with a minus 19 VIX. Thus, there is very little credit way out into the safe zone, because we do have a very large range to calculate with. So taking the risk is taking the risk, and I'm going to cover taking the risk over the weekend. But I will quickly bring you over here to the charts and walk you through. This is your cleaned Elliott Wave version view of where we are since we had our October lows. 1, 2, had our 3 as we went in here to December. Perfect 161.8. Had our ABC for our 4, did not violate wave 2, almost came to wave 1, and then we had an ABC rally up here for wave 5, completing either primary 1 of this final move for the blow off top of the bear B, or wave A of that bear B. 41.55 is the 50 retracement from the all-time highs to the October lows. And because we came up here and we breached it, there are a lot of bullish charts that are out there being very conservative about their upside views, because this could be a completed wave B, with wave C in progress to the downside and only looking to trap people in this area, because we did retrace exactly to that 50 retracement, came exactly to that 200 extension here as well, perfectly. So on the way down, 1, 2, had your 3, 4, 5. Perfect. 1, 2, 3, 4, 5, 250 extension. Almost as picture perfect as you saw all throughout all of 2022 on waves down. Since then, and where we are here, and I'll just go ahead and put you into a smaller view so that we can see it all. This is what we're looking at the moment. With a 1, 2, this being the 3, the 4 having come down here, and possibly putting in a 5, with this 40-46 being the big fib over here. Now you've got your 40-29, which is your 76.4 retracement from this dip, going back to the October lows. February highs, October lows, 40.29. That's why we came right to it yesterday and used it as well as we did, along with this 40.20, which if you want to zoom out as wide as you want to zoom out, you can see where your 40.20, this is only going to August. We will zoom out even further, and you can see how coming all the way back here to, where are we, in May, when we fell through there, where this 40-20 works out back in May. Had your little pop over here on the June pop, and then right down through it. And again, we're using a 12-hour time frame. Popped down to it to 30.36. Broke it in August, came right back down under it. Over here, same thing over here in November and December with the pop, and then the FOMC, and again down here. What a lot of people aren't really looking at is when Jerome Powell spoke back here in Jackson Hole. Breath on the QQQ is the worst that it's been in years. It's never been this bad. And that all comes because you have 8 stocks that are doing all the work. They're green. And everything else, more than 50% of the NASDAQ, is red year to date. So you're using that weighted average, but where you are here, right up here above this 313.26, you're at the QQQ resistance in September 1. So go ahead, be as bullish as you want to be, and as where this came from off of this with no catalyst whatsoever except the end of the quarter, it is starting to look much more that we have now moved into the full moon, which is now starting to make absolute confirmations that 3808 was the full moon. It wasn't 4078. And where we're going from this full moon into April 6th, you can look at your chart pattern. You can look at your Elliott waves. You can look at every bit of detail that you want to out there. It doesn't bode well, but we have the GDP report today. There is, from models that I've been running, a major move to the downside that is looking to take place. Should do nothing but fill that gap that we have here down to around 39.77. And anything that breaks over here at 39.50 is the only way that we will have any reason to start considering that we are getting a greater move to the downside, which was the forecast from the original view, because the 4078 fits so perfectly together with where our full moon was, together with where our chart settings were. So again, coming over to QQQ, right there, September 1, come over here onto SPY, and you're looking at SPY with a 10-point move off of that low from Tuesday in 2 days with no catalyst whatsoever. Zero catalyst. You're going into your GDP report at 8:30 in the morning. You are working with overbought, 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 overbought. You are working with RSIs of 90, 92, 92 on your Dow, your NASDAQ, and your ES. RSIs on your 60-minute of 92, 90, and 92, greater than, as you're going into your GDP report. So, again, the table does have everything that is ready for it, but until you get a reason and a thing, something to blame why nothing is taking place. And that was exactly where I was pointing to prior to everything taking on. VIX under the August lows. Here's your move down from last week, Friday, when we hit 39.09 over there on the SPX. Down below the August lows, gap to fill over here from Wednesday night when we had that major move on the ES. And you are barely hovering above the April lows. Now, reason these are pointed out is it is strictly upon you if you like to take the time rather than rely on somebody else to go out and look where these pivots are, where these lines are, and what has occurred when there has been visits to these pivots, to these lines. These aren't trend lines, these are price levels. The algorithm knows what these price levels are. The algorithm knows what those price levels are, as well as with the Fibonacci extensions and the retracements and the wave counts over there on the SPX. So again, you've got quite a bit of information in front of you. But where we are now, having broken above that 40-20, is we are obviously looking at the end of the month being tomorrow and the end of the month candle being that 39.64. We would very much be anticipating that we get a close above that 39.64. At the same time, the week began at 39.82.93. So having a close above 39.82.93 on Friday will very, very strongly with 2 weeks in a row, which is something that we have not had greater than 2 weeks in a row since we were in the August rally. A rally and the move that we're in at the moment are two completely different things. The last thing that I will bring up is the end of the quarter. The final day of December 30th, red. Very small volume, very small range, 20-point gap down, red. I only can bring you here to September 30th. Very small gap down, red. Because I have curtailed all of my data, so I don't need to scroll through it every morning when I go through here. But I will go ahead and share quite a bit of it over there because we have not had a green end of the quarter close since June of 2021 or 2020. I don't remember, but I'll go back through my data and look through it. And I apologize for having bored you. But the one thing that I do want to, again, bring out and very strongly point out is the March 31 trade of the week is back again for those who missed it a week ago. That $1.70 credit, $3.30 risk. You can do the math on that. You can see that you're getting somewhere very close to 50%. You can go back and look at your track record and see how prior trades of the week have all ended full credit. I wish you the greatest of Thursdays. I will be in the chat room close to around 11 o'clock this morning. I've got something to do with my kid. Needs to be done. I need to go to school. I need to watch her graduate. So catch you guys later, and I will see you in a few hours.